Welcome to our latest episode of the MHA's Our Separate series. I'm Matt Godfrey, Director of Banking and Finance at MHA, and today I'm delighted to have with me Richard Berman from the British Business Bank. Richard and I are going to be discussing the current market and how the British Business Bank is working with clients and brokers to navigate it. So Richard, can you start by telling us a little bit about the British Business Bank?
Yeah, so British Business Bank is the UK's economic development bank. So we're owned by government, and our role is really to work with the finance industry, but to find the areas, the gaps, perhaps the market failures, and try and fill those gaps by working, as I say, with financial services organisations. Our four kind of key remits are to drive sustainable growth, to unlock potential, to support innovation, and to help build the modern green economy. And that's all working with SMEs.
Okay, so work with SMEs. So is it just SMEs you're working with, or is it also the other banks and funds as well?
Oh yeah, so good point. So most of what we do is our actual work is through those other banks, lenders, CDFIs, fund managers, but all of our products and services are designed to support SMEs ultimately.
Can you tell me a little bit about the products and services?
Yeah, so core is our products are really those debt and investment products to get funds in. So I said a little bit already, but startup loans, the growth guarantee scheme, which supports a wide range of businesses across the UK, through to other sort of more almost sort of structural products that provide capital efficiency for lenders to allow them to do different things. So we have something called enable funding. On the sort of investment side, we have a number of different programs designed to support angel networks to get equity into those early stage businesses, and a range of venture capital sort of products to again get investment into organisations. The services we provide are almost designed to be complementary. So we have a range of services online, sort of all the usual sort of digital help. But we have things like a training resource through the Open University. We have a partnership called Learn with Startup Loans, where people can do training courses on entrepreneurship and how to understand tax planning and all those sort of good things. And ultimately, the other piece that's really important for us is to try and be a conduit to other organisations. So particularly other sort of governmental organisations, to try and help organisations sort of, if it's not us, if we can't help, we try and navigate them to organisations that can.
Great. So you're in a good position by working with clients and also with defenders to give, say, maybe a view on the current market.
Yeah. So we have two businesses really. We have what we call our banking business, which is basically products that support debt.
Okay.
And then we have our investment business, which unsurprisingly is products that are ultimately equity and debt and venture capital. I think there is a sort of a bit of a difference in the current market. Actually, we're about to release a report, so I better be careful and give a slight sort of preview that actually we're looking back over the last 12 months. Actually, the debt is actually not too bad. Actually, there's been increases in the amount of debt that's coming out of the market. There are challenges with necessarily where the risk appetites are, but debt seems to be relatively positive. On the investment side, it is more challenging. And I think the number of particularly sort of VC deals, early stage VC deals still are a struggle. I think one of our roles, though, is that sort of connecting the capital to the companies. So we try and make sure we're looking at either end of that spectrum. And I am always an optimist, and I just do feel there are still sort of wonderful businesses out there. If we can get the capital and the debt to them, that they will thrive. But debt, okay, investment still a bit of difficulty.
Okay, so maybe give say a few examples on the difference between the debt and the investment.
Yeah, so as I say, a lot of our products are delivered through partner organisations. So sometimes we're a little bit in the background, more involved in the supply into those organisations, but basically to allow them to do stuff they wouldn't otherwise be able to do. So it might be to support a sector that is struggling, or perhaps to do something at a pricing that's more likely to support SMEs and so on and so forth. So on the debt side, at one end we have startup loans. So it is probably the one product we have which is where we're much more in sort of directly engaging with the customers and marketing and more in the sort of public domain, so to speak. And so that's very simply £25,000 loans, 6% flat rate, no fees, very much focused on getting debt into those startup businesses, and we'll do sort of 11,000 loans or so this year, all the way through to a whole range of guarantee products, where we provide guarantees to banks, challenger banks, that CDFIs, so that they're basically using their own funds, but we're trying to make it more capital efficient or giving them some sort of support. So they're the sort of debt products. On the other side, we have various programs, like we have regional angel programs where we are involved with angel syndicates, where we will effectively co-fund to try and make sure that as the angels come in and put their money in, actually we amplify the impact by co-funding those. Programs that are there to support new fund managers into the market, both in terms of sort of cornerstoning that fund, but then also going in early to try and drag other funders in, all the way through to sort of more, broadly more traditional sort of VC type operations. We generally work with other fund managers, though. We do some direct investment, but most of our work is through other fund managers on the investment side.
Okay, so we can say then that there's two aspects really to that. Is you're de-risking it for the lenders, but you're also giving greater variability to, like you said, the startup businesses. So following off what you said about the debt and the investment, are there certain sectors which you're seeing more growth in or more demand in at the moment?
So traditionally our schemes are quite, we have sector specialisms, but actually a lot of the schemes, particularly on the debt side, are quite sort of sector agnostic. So startup loans, all sectors. But what we've seen recently through the government's restructuring, we have 8 industrial sectors that we're focusing on. It doesn't mean to say that the other sectors are sort of complete no-goes for us, but we do have particular focus on those 8 industrial sectors that, as I say, the government is looking for us. And it's to our mind, very logical, because they are those sectors where you would expect to see high growth, high potential. So things like life sciences, creative sector, and so on and so forth. Okay.
And with the support you provide, is it primarily UK based, or do you provide assistance for those companies maybe operating internationally?
It's very much a UK focused. There is, depending on, particularly more on the investment side, there are sort of nuances where obviously you kind of have internationally operating organisations, but fundamentally as a UK government owned entity, we are UK focused.
Okay, that's great. So who tends to benefit from the use of business bank enable products and support?
So ultimately it should be the SMEs. So, and without being too grandiose, one would hope the UK economy, if we play a part, probably a small part in trying to drive growth in the UK economy, but it is focused on SMEs. So the products we design, as I say, kind of working with the full range across the financial services industry, are all with that sense of, okay, how do we make sure that we can get the capital funds into those companies when they need them? And particularly, we shouldn't be competing directly with the market. So it's in those spaces and trying to design things that are doing something that in some way or other is additional to what the market's doing, to allow companies to sort of thrive and grow.
Okay, great. So obviously you mentioned startup loans up to 25,000.
Yeah,
that's 6% without the fee. What was on the other products that you assist with? What we say is the average transaction value?
I mean, it's sort of difficult to say because we're tending to put sort of large lumps into, as I say, DFIs, or in some cases banks, or providing guarantees. At sort of the upper end of our investment spectrum, we now have the ability to put sort of up to 60 million into particular investment funds. On the debt side, the sort of transactions with the lenders can be very large in terms of the guarantee or the sort of the debt that we're putting in. Where it ends up with the ultimate borrower, it's going to vary very much by the kind of the scale of the organisation. So, for example, we have guarantee programs going into the big mainstream banks, who obviously have sort of quite considerable limits. But then also we have something called community-enabled funding, which is sort of smaller chunks of money effectively going into the CDFI market to try and fill that gap where there's sort of organisations that potentially decline by the mainstream, but are still viable businesses. So we don't really have an average transaction size, I'm afraid.
That's okay. So I think that when you're looking at the support funding which you provide, the majority of people will probably know about the government growth schemes. Yeah. That are backed by yourselves. Yeah. How are they going at the moment?
Well, they are, I think, one of the sort of our I probably shouldn't have a favourite, but they're one of our real strengths, the growth guarantee scheme, because it's sort of almost, I think there's, there's a lot of focus in the sort of scale ups and those sort of high growth businesses, and particularly on the investment side, and they are excited. That's quite often where you get a lot of publicity and excitement of those sort of fast supercharged businesses that you want to become unicorns. But actually, I always feel you need that sort of stable base supporting the wide range of businesses, and I think that's what the growth scheme does. That ability for all of the partners we work with to have that guarantee supporting the debt that they're providing to get debt out to organisations that otherwise wouldn't be able to get it, and you've got that sort of stable base across the economy, and from that come your unicorns of the future. But I think it's a really powerful scheme, and one that in various forms has been running for a long time. It goes back into previous incarnations pre the COVID period, but I think now it's a sizable scheme delivering quite a lot of impact across the UK.
And obviously from experience, that loan product has a number of guises. So it's not just a term loan. You can also assist with, say, asset finance.
Yep, that's right.
Invoice finance.
That's right. It can sit behind a whole range of different bank and challenger bank sort of services and products.
Great stuff. Great. So the typical process for your, say, transactions and your services, is it going through the banks rather than applying yourselves directly?
Yeah, generally, our services are delivered through the banks. I always think it's a little bit of a franchise operation, really, that sort of we will provide that sort of debt and a lot of capital, and there's always the terms and conditions, and then the banks, CDFIs, and the rest, they act as that sort of delivery partner for us. And so generally the organisation will go to the bank, but we do have quite a lot of support ourselves to try and help people navigate that. So we have something called Finance Finder that people come to our website, sort of effectively a few bit of detail about what they're looking for, and then we'll try and direct people to the right organisation. But generally, people can go straight to their banks. On the investment side, it's a same sort of process in the sense of a lot of our products go through fund partners or through a angel syndicate, and etc. So, but we'll try and help navigate people to the right organisation if they're not sure.
Sure, great. So there has been a recent spending review. Has that impacted the bank at all?
It absolutely. So again, because we're government owned and ultimately funded, we get our funding from two sources. One is sort of money through Treasury, government money, and then also we now have that ability to crowd in third-party funds, and predominantly focusing on the pension funds. But the spending review is the key driver for us, and we're sort of really pleased with it. Essentially, has been a sort of a big expansion of the funds made available to us, both in the sense of a sort of additional sort of £2.5 billion over and above our existing sort of schemes to invest every year for the next few years, but also additional £4 billion, which relates directly to those 8 industrial sectors. So, at a time where there's obviously sort of capital constraints, we were very pleased, and I think that's primarily because we are seen as that sort of driver of growth, and if we can get those funds into SMEs, that's sort of, I think, very fair view that the SMEs will drive the economy of the UK.
I think that's great as well, because obviously people have spoken about doom and gloom with the economy in the markets, both domestic and international as well. But the fact you've got, like I mentioned there, £6 billion available to put into the market is a great sign, and it shows your confidence as well.
Yep, definitely.
Great stuff. So with regards to the market, it's not just the funds you work with.
No.
How do you work with brokers, and what role do you see them having over the next, say, 12, 24 months?
Yeah. The broker community is really important to us. We don't very often work directly with the brokers because of, as I was saying earlier, the way we operate, but the brokers work very closely with a lot of our partners. But for us, we have, I think, a very strong relationship with both sort of broker umbrella organisation, but also a number of brokers themselves, because they're quite often the route into those lenders. And as I say, it's sort of to make sure the brokers understand sort of almost what the products are that we're providing those lenders, to sort of make sure that the SMEs ultimately know what's available, growth guarantee scheme being a really good example. So for us to sort of engage with the broker community is important to help keep them informed about what we're doing and what's available. But also it's really important feedback for us as well. So just last week we held a forum with a small group of brokers, really, rather than us sort of speaking directly to them, actually just listening and sort of understanding what's going on in the market, actually what's any challenges, issues with the organisations that we work with, and actually helping us think about, well, what products and services do we need to develop? Because brokers have that sort of ear to the ground with the SME, and they can help us understand how we evolve the business.
Great stuff. Great. So, Richard, if there was one message you want to go out to the market, what would that be?
I mean, there's lots of messages. I mean, I'd love people to know about our products and services, but I think probably in the here and now, there's a lot of there can be a lot of doom and gloom in the press. And actually, I think for sort of, businesses with ambition, businesses with sort of high potential, high ambition, I think to know that there are funds out there available for them. And, we are part of that ecosystem, but actually to sort of not shy away from it and to make the most of the opportunities. And there's one message is sort of, as cheesy as it is, that the sort of the SME community, it remains confident, and if they've got opportunity to seek funds to grow their business and ultimately play a part in that national growth.
Great, thank you. That's all the time we have today for this episode. Thank you, Richard.
Thanks, Matt. It's been a pleasure today, and really enjoyed it.
Be sure to visit the British Business Bank's website, which is below on the screen, for any more information. Alternatively, come to mha@mha.co.uk if you think we can help. Stay tuned for the next episode, and thanks for watching.